Posting is recording the journal entries from the book of original entry to the proper account in the general ledger. Meaning book of original entry, this is the journal, okay? This is the journal entries that we have made, okay? And the posting procedures: first, prepare journal entries for all financial transactions. Second, open the general ledger accounts. So, I did ask you to prepare journal entries, okay? And now what we are going to do is we will open general ledger accounts, meaning we are going to have a record for each account. Third, enter each account from the journal entries in the respective GL account. So all journal entries, the accounts that you have used in the journal entries, now it will be entered in the respective GL accounts. Okay? Account here, as I have already explained, means cash, accounts receivable, so on and so forth. And number three, this process is called posting. Okay? Number four, determine the total debit and credit of all accounts. So this is called footing. And number four, get the net balance for each account. Write the balance on the debit or credit column with a higher amount. In the illustration, it will be easier to understand this number five. And lastly, double rule the net balance. Okay, the first step is you have to prepare journal entries. Okay. Step two is we will open the general ledger accounts. Opening a general ledger account means that we need to have a record for each account. Like in this case, our account is cash. So we have to have a separate record for cash. And what are the information of the general ledger? The information will be like the name of the account, which is cash, the account code, okay, and a columnar information, the date, the reference, the description, the debit, and credit. So actually, the general ledger monitors the debit and credit of an account, the entries of the debit and credit. Okay, of course, we have learned that the debit and credit represents increases and decreases of the account. So with this, we will know whether that account has the corresponding balance. Okay, so whether the balance is debit or credit. Okay, I would illustrate to you, class, that please take note of the GL accounts. Okay, the GL accounts. Okay, this description is the description for the transaction, the date, the reference, and description. These are information about the transaction. But as far as the amount, we are recording it as a debit or credit. Okay. In general ledger, it is very critical that you know the debit and credit of the account, because the debit and credit represents increases and decreases of account. Please take note of this line and this line, okay? So if you will take a close look of this, it looks like a T, a letter T. And for illustration purposes, we will use letter T to represent the general ledger. Letter T, or called T account, is a simple representation of general ledger. Okay? So for this discussion of general ledger, we will use letter T because we have to illustrate the general ledger in this slide and we don't have much space. So we will use the T account as a representation of general ledger, as a simple representation of general ledger. So here we will open the general ledger accounts. So we will have a record for each account, like cash, accounts receivable, and all other accounts. Okay, if you have 200 accounts, then you have to open a record for each account. Okay, So I will give you some examples here, okay, that we need to open. Okay, I just extracted some accounts for illustration purposes. Okay, and after that, after opening the general ledger for each account, then we will do the next step, which is posting. We will illustrate how posting is done. If this is our financial transaction and this is our journal entry, okay, so we have to prepare our journal entry. Journal entry is the first step, okay, and then we have to open the GL account. So we will use the account as a simple representation of general ledger. So in this case, we will be opening, okay, um, a T account for each account. Okay, our T account will have a debit and credit column. Okay, for illustration purposes, we will use the T account. Okay, to save space. Okay, now we will do the posting. So we will now illustrate posting. So this is the GL account, okay? And this is our journal entry. So what we are going to do is we will transfer, okay, from general or from journal, which is general journal, commonly known as general journal, the book, we will transfer from general journal to the general ledger. The account will be our general ledger. So in this case, cash. So this is cash. And you have to record 350,000 here because here the transaction is, or the journal entry is debit cash 350,000, debit furniture 40,000, credit owner's capital 390,000. So you have to transfer cash on the debit side, 350,000. And then open the GL account for furniture and then transfer the 40,000 or record the 40,000 on the debit side of the furniture. And then open the owner's capital general ledger represented by the T account. And here there is a credit of 390,000. So it has to be posted on the credit side. So what we did is posting, okay? So if we will do that for all the financial transactions and the corresponding journal entries of the financial transactions that we have done for February 2nd, this is our journal entry. And if we will continue posting that, debit cash of 200,000, credit loans payable, let's open the loans payable and credit 200,000 there. For February 3rd, that is the financial transaction, and this is the journal entry. So we will debit equipment. So that we have debited equipment, so we will post the debit to equipment of 60,000, and then credit to cash of 20,000. So here there's a credit to cash, so it will be posted on the credit side. Take note, class, that I put the 20,000. I recorded the 20,000 in the same row. Okay, on the first, I did not record it here. Okay, so you have to maximize the spaces. Okay, accounts payable, let's open the accounts payable and transfer the 40,000 to the credit side. Okay, and February 4, same thing, the entry is this. So there is here owner's drawing of 2,000, debit, so it's here, and cash credit of 2,000, it should be here. Okay, February 5, that's the financial transaction, and the entry is debit office supplies. So we have to open the office supplies account and post the 3,000 there. And then accounts payable 3,000. Okay, February 6, this is the entry. So loans payable is debit here, and then cash credit by 10,000. February 7, and this is the entry on February 7, debit accounts payable, so 1,005 here, and cash 1,005 here. So that is posting. Okay, we will illustrate for the next step. The next step is footing. Footing is adding your debit and adding your credit. Okay, so when you are going to add, you have to put a line to denote that you are adding that, like in this case. Okay, so you have to add a debit, so the amount is 550,000, and the credit, the amount is 33,500. If it is a single amount, you don't have to add it anymore. Just leave it like that. Okay, you don't have to add a single amount here. You have to add the accounts payable. Okay, and here, okay, there's nothing to add. Okay, so just leave it like that. Okay. Okay, the next thing that we have to do is get the net balance. In getting the net balance, okay, what we have to do is this comparing the debit and credit, the totals. The debit total has a higher amount. Okay, this is expected because assets should have a higher amount because assets normal balance is debit. Okay, so you would expect that assets would have a higher amount. Okay, so in this case, 550,000, then you have to deduct 33,500 the credit. Okay, so but in doing that, to denote that you have a mathematical calculation, you can put a line and then 550,000 minus 33,500, then put the difference on the higher amount. So in this case, 516,500 is the net balance. Okay? So alin pa dito ang dapat nating kunin ng net balance? Okay? If only a single amount, it means that is the net balance. So we have accounts payable, 43,000 minus 1,500. Or before that, if there is only a single amount, we will also double rule that amount to denote that is the uh, net balance. Take note, class, that it's not a broken double rule. It's a straight rule, double rule. Okay? In this case, wala lang akong makitang image na straight line na pwedeng na double rule, kaya ginamit ko na lang ito. Okay? So it has to be a straight double rule. Take note of that, class. So in this case, for single amount, it means that this is the net balance. So in this accounts payable, we have to get the difference. So accounts payable, loans payable, owner's capital, expect that these three, accounts payable, loans payable, and owner's capital, has a credit balance kasi yun ang normal balance niya. Owner's drawing, as we have discussed, is a contra account of owner's capital. So its balance is the opposite. Okay, so it has a debit balance. So in this case, the balance of our accounts payable is 41,500. If it is like this, wherein there's only one amount, you don't have to add, but you have to get the net balance. Okay? Owner's capital and owner's drawing. Okay. Okay, then we will have to continue. Let us continue. Oh, by the way, class, so we are not done yet with the posting. Okay? We are not done yet with the posting. If these are only the transactions, this is how it looks like. I did add already because we have to include the transactions for the month of March. Okay? You will note, class, that the transactions that we have here from February are only for real accounts. Okay? Which means cash, liabilities, and equity. Now let us include the financial transactions that involve nominal accounts, which means the expenses and the revenue. And those transactions are demonstrated on the month of March. Okay? So for the sake of space, we will just capture the balances. on the next slide. Like in this case, cash, we will carry forward 516,500, furniture 40,000, accounts payable 41,500, loans payable 190. So only the net balances we will carry forward in the next slide. But in reality, you can continue the posting. You don't have to do it first. I mean, you don't have to get the subtotal. You can continue the posting normally based on, if you are using manual record, you will get the totals of debit and credit on a monthly basis. Okay, on a monthly basis. Okay, and then carry forward the balance on the next month. So that's what we're going to do. Okay, for the month of March. These are the balances from the previous slide. So March 1st, okay, the entry is this. Okay, so we will now pause that entry. Open the rent expense, and then cashier is 20,000. So let's record the cash. And March 5, this will be the entry. So here, 65,000. And then credit service income. So let's open service incomes the account and record the 65,000. Okay, and the next is March 15, and this is the entry. So we have to debit salaries and enter that in our T account, and cash of 30,000 as credit. And next, March 24, we have utilities of 4,000 debit, and then accounts payable 4,000. I did not put any more the debit and credit class, so it's understood. Okay, for I am a saving spaces. Okay, for our illustration. Okay, and March 25, that is our entry. So we have accounts receivable debit, and put it there, and service income 12,000. And March 30, this is our entry. Okay, so debit cash 8,000, and credit accounts receivable 8,000. We are not discussing anymore the entries because we have already discussed this. March 31st, paid utilities. So this is the entry. So we'll just have to post it, and then post cash of 4,000. Then, as we have learned, the next step after we have posted it, we will do the footing. So footing means adding the debit and credit. Okay? So we have to do that. Okay? And for service income. Okay, we are done with footing. And the next step is getting the net balance. Oh, by the way, before getting the net balance, some companies, okay, would like to have to make sure that the debit and credit totals are presented. Okay, so some companies are doing what you call a trial balance of totals. Okay, so if we are going to do a trial balance of totals, meaning the debits and credits will be presented. Okay, so that will be the trial balance of total. So if we are going to do that and see whether we are balanced, so this is trial balance of total. So meaning that we are capturing all the totals of debit and credit of all the accounts. So this is how it will look like based on our T account. Okay, so here we balanced it. Are we balanced? Okay. So this is a trial balance of totals. Normally an accountant will do that. So the accountant will know what are the entries on both the debit and credit. Okay. But for us, okay, it is a normal, the normal presentation is that getting only the net balance. So in this case, we will get the net balance. So the net balance of cash will be 589,500 minus 54. 535,500 is the net balance. So on all the accounts, we will just get the net balance. Next is accounts receivable. The net balance is 4,000. So again, class, to emphasize, okay, you have to expect that the net balance of assets will have a debit balance, and expenses will have a debit balance. Liability and revenue and owner's capital will have a credit balance. Owner's drawing, because it's a contract account, will have a debit balance. So in this case, let's have the net balance, because it's only one amount, so we will just go ahead and double rule the amounts. Here for accounts payable, it's the amount here is 41,500 credit, loans payable, owner's capital, owner's drawing, and service income. So we got the net balance. So now we will present now the trial balance for the net balance. Okay. In your seat work or in your assignment, you'll just have to present the net balance, the trial balance with net balances. Okay. So in this case, we will prepare what you call, by the way, we have to double rule the utilities, salaries, and rent expense. So now we can now prepare trial balance. And this trial balance is called trial balance of balances. But if it just state trial balance, it means that it is trial balance of balances. Okay? So here, there's only one debit and one credit, okay, because it's not total, it's only the net balance. So if we will extract the balances, we will have this trial balance. And it's there, it's balanced. Of course, the total will be different from the trial balance of totals, okay? This because these are only balances. Okay, let